So good morning. Good morning. If you can be able to see me, you can say a good morning. Good morning. My name is Regina. I'm here with you for the Finance Bill 2024. So if you can see me, you can say hi. So if you can see me, you can say hi on the chat. I'll see your chat. And then within a minute, we can start off. So you can share the webinar to as many people as possible. It is free of charge. My co-hosts, I hope you can be able to allow people to come in as much as possible. I can see people waiting in the lobby, so possibly you can allow them to come in. So karibuni sana. I'm so excited to have you here. So, and also, you can also tell me where you're watching the webinar from. Possibly you can tell me on the chat also. Good morning. I can see the good mornings. Just share the logins. I'm also hoping that you're able to hear me properly. If my internet is okay, it's not buffering, you can tell me. You can tell me. I'll be very happy to hear. So far, I know you've heard something about the Finance Bill 2024. So you can tell me. You can tell me what you have heard. Possibly on the chat, you can tell me what you have heard. So that what you have heard is what I've also heard. And also I'm going to share to you what are now the steps towards now becoming a bill, an act. So what are the steps towards public participation and what should happen so that it now graduates to become an act. So with that, I can see we are in good quorum. Let me proceed to the act, to the bill. So Finance Bill 2024 breakdown, that's our conversation today. And we are going to talk about the different sections. So we'll talk about the overview and then the proposed changes in income tax, VAT, excise duty, tax procedures, and of course the miscellaneous fees and levies. So there are different sections, and the finance bill is affecting different sectors. So depending on the sector of what you're doing or the business, you might be affected differently than any other person. So I'm happy that you're here. So the Finance Bill 2024 was published and gazetted on 9th May. So that is actually when last week. The proposal in the bill can be seen to target to increase the tax base and enhancing revenue collection. So this is one of the biggest part of the revenue authority and of course the government saying that only 20% of businesses in Kenya that pay taxes, 80% don't pay taxes. So it is wanting to increase the tax base and making sure that every person doing business, employed, every person in Kenya is also able to pay taxes. Of course, most of our businesses, about 7 to 10%, 7 in 10 businesses are SMEs and micro SMEs. So also that also contributes to the tax base being narrow. But the finance bill is wants to expand and increase the tax base. So the proposed changes are in the Income Tax Act, the Value Added Tax Act, as I had mentioned, and the procedures, the miscellaneous fees and levies, and of course the Excise Duty Act. Generally, the bills come into effect on the day of assent by the president. So after we go through the public participation, the bill is taken to the courts. It will be assent by the president or the date of operations. Sometimes when you look at the bill, it will state from now, July 1st, this should be, or January 2025. So either way, whatever comes earlier becomes the effective date of the changes. So what are these changes that are happening in the finance bill 2024? These are proposed changes. So they are proposed changes. First of all, and I felt this was some of the taxes that gave a lot of participation, and I foresee a lot of participations in this. And if you remember the proposed changes for Finance Act 2023, the biggest of it was the housing levy, and it was made to an act. And then there were so many other things, so many other changes that happened into it. So this is the process that will happen. Introduction of motor vehicle tax at 2.5% of the vehicle value payable upon issuance of insurance. So this means that when you be paying for your insurance for the motor vehicle, there is an additional 2.5% of motor vehicle tax. The implication is to, of course, to get higher taxes and more revenues, but it's going to be a burden to the motor vehicle owners. And remember the insurance that we pay on a yearly basis. Most of it is based to about 5% of the motor vehicle value. So when you do an additional 2.5%, the insurance is going to be extremely expensive. Of course, this is a levy that will be, the insurance companies are going to be the withholding agents. They are the people that are going to help the government in the collection of motor vehicle tax. And I feel that it has a lot of issues that should be discussed, because some of the motor vehicles, some do comprehensive, others do third parties. And so, and of course, if it is on making sure that the motor vehicle owners pay more taxes, there's also taxes on fuel, on when you buy the vehicle, there's also taxes, custom levies, and so many other taxes on the motor vehicle. So that is a hot debate. And of course, we're going to see if that will be enacted. Withholding tax on goods supplies to public entities at 3% for resident and 5% for non-resident. This means when we're supplying goods to public entities, this could be parastatals, could be the county governments. And at the moment, the withholding is done on 2% of VAT. So most of the time when you're supplying or you're doing any services to the public entities, you've done 2% withholding on VAT. But now at 3% withholding tax, this is withholding of corporate tax is going to be is being proposed. Meaning, if you look at the contractors, in the same way how contractors do, there's a 2% of VAT and also the 3% the contractors withholding taxes. Similar, that at the end of the year, this withholding tax is an advance of corporation tax. So at the end of the year, when you're doing your business income, the corporation tax, you're going to acknowledge this 3%. So when you be supplying to these public entities, on top of the 2% of VAT, there will be now the 3% withholding tax. Taxation of income from digital marketplaces platforms are 20% for non-resident and 5% for residents. Meaning, there's the taxation of digital marketplaces and platform. And I felt, when I read about this, I felt there should be more explanation of what are these digital marketplaces and platform, because most of the time as businesses, we are using the digital platform, but as we use those digital platform, we also do corporation tax, we do VAT. So I felt this is something that needed more elaborations. Next week on Wednesday, I'm going to talk about taxation in the digital business. And I think because most of our businesses, we putting them in the digital space, we need to understand more of this. So for your business that you're doing a digital wallets that people are able to pay for your goods and services through the digital wallet, are you being affected by this 20%, or will you still do the 30% corporation tax? So we're going to expound on that. And I also feel that it also requires more specification when it comes to the marketplaces and the platforms. Introduction of significant economic presence tax at 30% for non-residents. So this is a tax on non-resident entities, which is significant economic activities. It is supposed to address tax avoidance concerns. So when I also read this, when we talk about non-resident entities, these are entities that are not registered in Kenya. They have come to do business in Kenya. But this, when they come, for instance, they can set a subsidiary, they can set a branch in Kenya. Most of the time, they are taxed in their local countries. So what about double taxation when it comes to these non-resident activities? And then also the word significance, like, for instance, when we'll be measuring the ones that are doing significant economic activity presence, what about the ones how do we measure significance in their economic presence in Kenya? So 30% is the same as corporation tax. So also I think the specification of double taxation, the significant economic presence in Kenya, I also think there should be more explanation on that, so that we don't tax and we also don't do it unfairly, and also we encourage a foreign investment in Kenya. The same way with minimum tax, up to minimum top up tax for resident entities in multinational groups, similar to the previous one, to prevent profit shifting and then ensure fair taxation within multinational corporate structure. Same that when we are having the resident entities and they have the multinational groups, that there's the minimal top-up tax for them. Remember, when the multinationals are setting up subsidiaries or branches in Kenya, there's something that we call transfer pricing policy that also ensure that the profits are not being shifted to the multinational groups in other countries. So there's also a bit of more explanation when it comes to the to how those multinationals will be affected on this. deductibility of shift or SHIF, post-retirement medical funds, and affordable housing contribution. I think this is something that have been happening before, but it is just put there to make sure that it is specifically on the Act. So the contribution to NHIF, now SHIF, and the affordable housing levy are deductible expenses to the company. So also giving a relief to the company, because some of these contribution also the company is also contributing on behalf of the employees. So also being affected as an allowable deduction. Of course, that's what happens. So I feel it was just to make sure that it is elaborated well in the Act. Investment deductions of spectrum license purchase at 10%. Okay, so this is to encourage investment in telecommunication infrastructure through tax incentives. So this is supposed to encourage the people that are going to invest in telecommunication infrastructure on making the licensing purchase a bit lower. So there's also taxes on an eco levy for manufacturers and importers will be introduced. So this is an extra levy when you are a manufacturer or an importer. When I read about this, I also felt like, especially for manufacturing, there are so many levies and taxes that are happening. Even for importers, you have custom levy, import declaration levies. There are so many levies. So on top of it, having eco levy, so there's going to be an impact on costs of production. And of course, when the cost of production is a bit high, this cost is graduated to the end consumer. So whatever is being manufactured by the manufacturer could end up being a bit more expensive. Imported motorcycle beyond a certain price will be taxed 10% of value instead of a flat rate. So similar for motorcycles, we know that the motorcycle business has been quite a huge business in Kenya. I also felt the portion where they said that the certain price, I don't know which is this certain price. So possibly to also expound more on that, so that we also make sure if we are targeting motorcycles that are imported for luxury or the high end, could be specifically stated, so that we also don't affect the business. The motorcycle business in Kenya is quite a market altogether. So that also the pricing for those motorcycles could not also be affected. Also, the name motorcycle, what does it mean? Is it motorcycle? Is it tuk-tuk? Is it bicycle? So also a bit more on that. Taxation of interest income from infrastructure bonds for residents. So when we talk about the infrastructure bonds and the investment, there is an interest income on that investment that you receive. So there will be some taxation on the interest. Most of these have been exempt to encourage investment in the infrastructure bonds. So I also feel that we're also going to make them unattractive too, for people to invest on them. So when we come to VAT, the value, so those are some of the proposed changes for the corporation tax. The biggest being the motor vehicle tax at 2.5% of the value of the motor vehicle. Now, of course, the withholding tax on goods applies to entities. I've done an explanation on that. So when it comes to VAT, and I think this is where the hottest debate have been, and I feel like the finance bill must always have something that the common Kenyans can talk about, because not everybody is owning a car, not everybody is applying to the entities, to the parastatus. But most of us eat bread in the morning. So VAT exemption on bread will be removed, meaning that the cost of bread might go up. And I think it is a cause for us to have a conversation. So the bread production or manufacturing is VAT exempted. So I don't know why the specification of bread than any other consumer product. So we're going to see also a participation for this. Removal of VAT exemption from financial services such as credit, debit cards, insurance, money transfer services, foreign exchange transaction, check processing, and so many other financial services. So for me, I think this is one of the biggest change when it comes to the proposed changes. And I think this is really going to affect most of us. When we talk about VAT, VAT is on input and output, meaning when we charge financial services for VAT, most of them, they don't have input tax, meaning that the 16%, and this is 16% this 16% will be graduated to the final consumer, and the final consumer is you and me, meaning that the services, the financial services, will be very expensive. So these services may face a higher cost when you're doing some of these transactions, especially the money transfer at the bank level. We're going to see a lot of expenses on this. The VAT registration threshold will be increased from 5 million to 8 million %. I thought this was a good one, that the threshold for you to be VAT registered is now at 8%, is proposed to be at 8%. I first felt, what was the need for it being expanded to 8%? They said it's to encourage small businesses to grow without immediate VAT obligation, but also at that level of from 1 million possibly to that 8 million, there's turnover tax and other taxes that, like the housing levy that was being introduced to them. So I also felt like it was also introduced there, that also because in the recent about a year, the turnover tax has really been stressed. So I also felt on one hand we win, but on the other hand, the turnover tax is there. And of course, also the housing levy, which I'm going to talk about, is also there for these small businesses. Possibly the biggest win is that the VAT, when you come to the VAT filing of return every month, is extremely cumbersome to the small businesses. So possibly there could be a win. Exemption of transfer of businesses as a going concern from VAT, also a nice one. This is where, when you're transferring your business as a going concern, could be you're selling it, could be you're doing a merger. The transfer, at the point of transfer, you don't charge the VAT, so that you can encourage the continuity of that business. Limitation of VAT exemption on insurance premiums. So the limitation of the VAT exemption on the insurance premiums. This aims to generate additional revenue from the insurance sector. Remember, we said now the insurance sector is being targeted the same way the financial sector has a big target on this finance bill 2024. So at the point where the premiums, the insurance premiums are being remitted, there's the VAT. Application of VAT on betting, gaming, and lottery services. Most of these gaming, there have been an excise tax. There's the excise tax that are being levied on the betting and gaming and lottery services. But now there is now a proposal that the VAT also will be remitted on those betting and gaming. Of course, making them the consumer participating in this gaming will face higher costs. So this is also an area of great interest. Our country in the past, like 5 years, we've been doing a lot of gaming and betting. So, and also last year, the Finance Act introduced excise tax on this, increased the excise tax on the betting and gaming. Now the introduction of VAT, making sure that when you're betting, there are so many taxes that also be charged on that activity. Removal of VAT exemptions in tourism, manufacturing, and construction sectors. So these changes aim to broaden the tax. So some sectors will be affected when it comes to the VAT, exemptions. This is, of course, making sure, even if we are going to collect taxes, the manufacturer, if it is the manufacture of product, the final product that is going to be sold will be a bit more expensive. So those are some of the proposed changes when it comes to VAT. For me, I think even if we're going to have a debate on the bread, the biggest debate we should have is on the VAT on the financial services, because most of us use banks, we do mobile banking, we do so many transfers. So this is, for me, I feel that is one of the greatest change that is going to be imposed, and it's going to be extremely expensive, especially on us, on how we're going to operate businesses. So proposed changes in excise duty. So for the past few years, we've seen so many changes when it comes to excise tax and the duty. So excise duty on financial and telecom services will remain at 15% for mobile transfers and at 12.5% for betting and gaming. So the government will continue doing a lot of collection. So if you consider the Finance Act 2023, when it was effected and the 15% was done, some of us, if you were keen to check your bank statement, you could see this increase of excise tax. 20% excise duty on fees charged by digital lenders and bank will be maintained. So the 20% on fees aimed to generate revenue from digital lending and banking services. So still very keen on the financial services. Excise duty on digital services offered by non-resident will be 20%. A 20% excise duty on digital services by non-resident help regulate the tax cross-border digital tax transactions. So this is going to align with the global trends where the country are imposing taxes on digital services provided by foreign entities contributing to domestic revenues. So if you're going to have digital services, you're offered by the company that is offering this is not a resident company, there will be 20% of excise levies. Excise duty on money transfer service will be increased from 15% to 20%. So this is also a very huge change. Increase of excise duty from 15 to 20 on money transfer services. So as I read the first one, there was the 15% that was was maintained, but now the 20%, an increase to 20%. This may lead to increased cost of customers using mobile transfer services. What does it mean? Does it mean we go back to cash transactions? Because now the mobile transfer services will be very expensive. So, and Kenya is one of the countries that we do a lot of mobile money transfers. We do the mobile money transfer, even if it is via M-Pesa, there are so many. We are one of the countries that use a lot of mobile money transfer services, whether from the banks, from the M-Pesa, from all that. So an increase to 20% is going to make those services very, very expensive. Automatic inflation adjustment of excise duty rates will be replaced. Excise duty payment timelines for alcoholic beverage manufacturers will be extended from 24 hours to 5 working days. So the 24 hours was introduced by the Finance Act 2023. So there was a lot of outcry that they were unable to remit the excise duty within 24 hours. So the extension is a relief to the companies manufacturing the alcoholic beverages to make sure that they are also able to maintain their cash flows. So that is a bit of a win for them. Tariff classification in the Excise Duty Act will align with the East Africa Customs Union Protocol. So aligning the tariff classification with the custom will streamline the trade processes within the East African community. So it is going to promote economic integration and reduce tax tariffs. So the tariff classification, sometimes when we talk about aligning, meanings possibly there will be a change in the negative or a change in the positive to just make sure that the East African the East African community, the integration of the economic when we are doing transactions within the East African countries. So before we come to the tax procedures, for the excise duty, I feel the mobile, the financial, the same way I talked about the VAT for the financial services, the increase on the mobile transfer services from 15 to 20%, still making the whole financial services becoming very, very expensive. So for me, I think in the proposed changes on excise duty, there should be a debate on the mobile transfer services. And of course, because some of this increase was done within 2023, now within a year, now the addition of 5%, I think there should be a lot of education on, a lot of checking on this, so that at the end of the day, we also make sure that because all our businesses will need funding, our businesses will need these transfers. These are backbone for operations of businesses. So I think the VAT introduction, the increase of excise duty on these services should be rechecked so that the business is able to operate well. So when it comes to tax procedures, and you can ask me a question on the chat, kindly ask me a question on the chat. Let me talk about the tax procedures where items. KRA will be granted powers to enforce items integration. Items integration with penalties for non-compliance. So meaning that for you to that KRA can enforce items integration to your businesses. So these changes aims to enhance tax compliance by integrating items with penalties for non-compliance, ensuring accurate reporting, monitoring, and tax-related transactions. So possibly when they are coming to visit your business, and of course that happens when they come to visit your business and they find that you're not items compliant, they make it as a rule. And when you go to these enforcement meetings where a letter is written and you're told, come visit our office, they check your books. One of the things that they do to you is to make sure that your items integrated. So this is there. This has been done. The other portion that they can do, not just visiting your business, they can also, if you're doing a transaction with another business and someone's using your PIN and discovered that they bought from you, but yet you're not items compliant, they can also use that transaction to make sure that you're items compliant. So is of course pushing the items compliances to the next level. I was checking because I don't know where I put the note here. I guess okay, Sawa. I've seen where it is. I guess I put it in the wrong place. The bill also proposed 2 million penalty for failure to comply with items protocols. So this is also something that I would want you to note, the 2 million penalty for failure to comply with items protocol. So the moment they come to your organization, or they do surveillance, or they use their data system to know that you're not items compliant, you can be charged a penalty of 2 million. And for me, I felt that this was a lot. This was quite a lot. Especially because most of the businesses that are unable to be items compliant are businesses that are micro SMEs and the smaller, the micro. So I think if you charge a business 2 million, it means it will just close down. So I thought the penalty was on the higher side. Possibly they can, even if they are really pushing our businesses to be items compliant, I think that extra push might lead to businesses also collapsing on the other side. So the bill grants KRA certain exemptions to data protection laws for tax assessment and collection purposes. So, this means that KRA, of course, is supposed to collect data to ascertain if your business is compliant. At the moment, they are unable to access your bank details unless they are provided with. But also, in case they request you, for instance, for this data and you're unable to provide, at the moment they can still be able to look for this data from other sources. They can write a letter to your suppliers, to your customers, demanding the same data. They can write to the bank and receive the bank statement that you're not providing to them. So at the moment, KRA, if it needed to access your data, they can still be able to get your data. So changes in streamlining the tax-related data handling by exempting certain data processing activity. Ensure KRA can effectively access and collect taxes without legal barriers. So at the moment, I feel when it comes to them ascertaining if you're tax compliant, they can really be able to get that information using the right channels, and of course they are open to get that data. New powers will allow KRA to demand agents deduct unpaid taxes owned by taxpayers. Still the same, I still feel this also has always been there. KRA is being granted powers So if you're unable to pay your taxes, at the moment, KRA is able to issue agency notices to your bank account, and they can instruct the bank to send the money in the bank account to them. They can also make sure that any money received in that bank account is remitted to them. So at the moment that is happening. Also, they can write the letters to your customers. So if you're having money from your customer, they look at your sales, and they can be able to identify your customers, and they can write to them. So if you've been supplied to the county government, for instance, of Nairobi, they can write to them and tell them that you have unpaid taxes worth possibly 10 million, and they can tell them, instead of you paying this customer, you can pay to us. So at the moment, they can be able to do that. So this change places a responsibility on agents to deduct unpaid taxes, potentially increasing the tax compliance as agents become directly involved in tax collection efforts. So at the moment that's happened. So when the bank is given that letter, possibly is now a little push, because at the moment, banks, when they are issued agency notices, they also make sure that at the moment, what they do is they close the bank account, so you don't operate. But now, possibly with this, they can even make sure that KRA can write to them and tell them, remit the money in that bank account within 7 days or within 5 days. So possibly pushing them to now do the payments, because at the moment, KRA can write letters demanding the taxes from your agents. KRA time frame of issuing objection decision will be increased from 60 days to 90 days. So this is a good extension, especially for us who do tax representation to clients. So the 60 days has been sometimes very, very not sufficient. So when you do an objection, this means you've been audited, and when you're audited, an assessment has been raised. And what we do is that from the day of the assessment, we do an objection within 30 days. So after 30 days, the determination of that objection decision happens within 60 days. Most of the time, the 60 days are not enough. And sometimes you find KRA, because of the strict rules, they actually do the decision within 45 days, 50 days. They don't even get to that 60 days. During the 60 days, you're supposed to review the case afresh. So this is a case that possibly you even spent a full year doing and looking at the documentation and the paperwork. But now, during objection, the same case that you did within a year or plus, you're supposed to determine it within 60 days. So for me, I felt this was a better, to make sure that those cases are able to be determined fully, and a fair assessment is done at that particular point, and also exempting these cases from going to the tribunal, to the ADR, because an amicable solution can be given at the objection level. So when you're not able to get at the amicable solution you are looking for at the objection level, you can now graduate the case to the tribunal, and of course even to the ADR. So also at the tribunal and at the ADR, the team is constraining. The cases at that level, there are so many, and so KRA sometimes is unable to work on them on time. So I think the addition of days is helping them also to determine and be able to handle the cases correctly at that level. KRA will have powers to refrain from recovering unpaid taxes under certain conditions. So taxpayers may receive relief from immediate tax recovery in specific situations, promoting fairness and addressing taxpayers' challenges without compromising overall tax collection. I think there is more to explanation for this, because as we talked about the powers to ask for documentation, to demand money, when you talk about KRA allowed to demand taxes from agents, so and now the powers is being refrained from recovering unpaid taxes. So I think there is more to this that we want to see more of kind of the explanation for this. At the moment, when a tax demand is issued, most of the time when an audit is fully complete, you've been done an assessment on the system, they'll give you like 30 days. They'll send you a demand within 14 days to pay the money due, possibly within 7 days or 14 days. But after that, possibly now the demand is being done within 14 days, you're given another 14 days. So those are about possibly a month. Within a month, you may find they give you a final demand, and then possibly they issue an agency notice to the bank account, especially if you don't respond. So we want to see, what does this mean? Does it mean if we do a payment plan, you can be able to understand the client because of the financial hardships that are there? So I think a bit of more explanation on that. Weekends and public holidays will be excluded when determining statutory tax laws, timelines. So excluding weekends and public holidays. So when it comes to the deadlines, so for instance, when we talk about pay, it is supposed to be filed by 9th, the VAT by 20th, now the housing levy by 9th. So I don't know if we exclude the weekend and the public holidays. I don't know if we're going to have an extension of the of those days. So I would want to also see how this was going to be interpreted, and especially in the system, in the iTax system, because the iTax system has been given those dates. So we want to see how the system is going to be wired, so that where there are public holidays and the holidays, the weekends, it doesn't charge penalty. So we're going to see how that comes in. So because sometimes you find something like this is passed, but the system is still giving the penalties and interest at that particular day. So I would want to see how that affects the iTax portal. KRA can deduct taxpayers to KRA can direct taxpayers to integrate their system with KRA system for real-time document submission. So this also on enhancing the e-teams, where there's the e-teams integration. So if you're doing your point of sale in your office, you can integrate it with e-teams. The moment you integrate with e-teams, KRA can be able to see how you're doing your sales on a real-time basis. So directing the integration to enhance data accuracy, transparency, efficiency in tax reporting and compliance. There are some companies that are open for this integration. Actually, they have done the e-teams integration, that all their sales are integrated with iTax, with the e-teams system, and they can be able to, they don't have a problem with that. So I would want to see this directive, how it's going to affect all businesses. Can we get to a point that all our businesses have to operate on the e-teams portal? And all our accounting software has to be e-teams integrated. So this is also something that I would want to see how that moves in. Or is it during an audit where they tell you after audit you have to integrate your system with the care. And of course, when it comes to system integration, it also comes with costs. For us, for the companies that are looking to integrate the accounting system or ERPs with eTeams, there is a cost for integration and maintaining that integration. You find there are some companies that are charging on a yearly basis. So there's also a cost when it comes to these integrations. So that is the tax procedures. So the biggest, of course, being the eTeams integration and the 2 million penalty for failure to comply with eTeams, the integration of data. I think mostly the past 2-3 years, there's a lot of digitalization of tax, how the tax collection and remittance, and we can see it in the tax procedures, the proposals that are there. So what about the miscellaneous fees and levies? So the reduction of export and investment promotion levy rates. So they are going to be changed. The reduction of export and investment promotion levy rate from the current, that is 10 to 17.5%, depending on the export and then depending on the particular item, to a flat rate of 2%, aiming to make imports more affordable and attractive. So this is supposed to encourage business. So for businesses that are doing the export and investment promotion levies rates, they are going to get a bit of a relief. So I think with the Finance Act, the Finance Bill 2024, those are mostly the highlights. And as I told you, this bill is due for public participation. So you can also give your view on it, and we see what to be scrapped out, what to remain, and then it can be graduated to become an act. So the biggest highlight for me is a VAT on the financial services, as I mentioned, the push for all our businesses to be eTeams compliant. So we can do, and this is a debate that you're going to be doing even in the near future. So be here, we're going to discuss more even of the finance bill. And of course, there are so many debates that are happening, and also the relevant authorities also answering questions on the specific items in the finance bill. So we're going to continue with this conversation. So because today we do the tax trends, so the Finance Bill 2024 was one of the tax trends, but I felt because I guess about a week or two ago, was this letter that was released about the affordable housing levy. And there were so many questions that are happening, and people were asking what does it mean? Because we left the housing levy being levied on the employees' salary. So what is the extra that is on this letter? So I want to explain what is here. So the affordable housing levy, and as we know, this has been a hot debate from the Finance Act 2023, which was enacted, and the 1.5% of the salary of the employee, and the employer contributing the equivalent amount of the 1.5%. If you remember, that act was taken to the courts, and issues of inclusivity and a legal framework. And if you remember, the bill came back to the parliament and went back, and there were some changes that happened. And especially the changes was on the inclusivity, meaning that the people that were employed felt like the affordable housing levy was just on them, but there were other people who are doing businesses and other activities that should have been subjected to the affordable housing levy. And some of them are the rental income. So the affordable housing levy will also be done on the people that are doing the monthly rental income tax. So if you're doing the MRI on a monthly basis, you're going to do the monthly rental income tax. That is 7.5% on residential property, the 7.5%. That is supposed to be done on gross rent. And it is supposed to be levied by 20, it's supposed to be submitted by 20th of the following month. The housing levy is supposed to be done by 9th. So you're going to do both of them. So you're going to do the monthly rental income tax, and you're going to do the affordable housing at 1.5% on the gross rental income. So I don't know. I don't know if the landlords are going to to complain about it, but this is solving the issue of inclusivity. The other portion was the gross sales, which some of us were unable to understand what it was meaning, amount chargeable to turnover tax or any other sales before VAT application. So this is where the small, as I talked about the small businesses, this is the place where now that you're supposed to be doing turnover tax, you'll also be required to do the housing levy. So when I checked that schedule, this is on the housing levy. So the Act 2023, the Finance Act 2023 made the turnover tax was increased from 1% to 3%. But the affordable housing levy, this was done in around March 2024, reduced the rate from 3% to 1.5%, meaning that the 3% which was there, 1% will be turnover tax, and 1.5% will be affordable housing levy, and 1.5% will be turnover tax. So the 3% is now subdivided into two out of this amendment that was done in March 2024. So for people that are doing turnover tax, you also be required to do housing levy. So you do the turnover tax, 1.5%. And if you check the iTax portal, you can see the change. If you go to file your return, you can see the percentage has been changed from 3% to 1.5%. And you also do the 1.5% for housing levy. So someone asked, why are we doing it twice? Why don't we do it once? So I know you also want to ask that. So my sixth sense tells me, so when you're filing for this, I'm imagining that this money, when you file for this, the turnover, for instance, that tax goes to the turnover docket. But when you do the housing levy also, it goes to that docket. So they are telling you, separate for us this money before you file. So I think so. Also making the work of filing a bit cumbersome. When it comes to rental, monthly rental income tax, it was at 10%. But from January 2024, through the Finance Act 2023, it was reduced to 7.5%. So now there's 7.5%, and then there's 1.5%, so total 9%. So also being cumbersome that you have to do these returns twice instead of one time. So, but of course, solving now the issue of inclusivity. What I really wanted to see about the affordable housing levy was the exemptions that were proposed. So there was some proposed exemption. I was thinking that through the Finance Bill 2024, the proposed exemption will be proposed there on the bill so that they can go through the legal process, but they are not there. So some of the exemption was, if you're owning a house, do you still contribute to the affordable housing levy? So there are still so many things that should be possibly discussed. So for the activists within the chat, you can go to the courts and make sure that those proposals will be there. So some of the proposals was, if you're owning a house, you don't contribute. If you're above, they had mentioned above, I guess, 50 years. There were several that you also don't contribute to it. So, and of course, when we have those exemptions, you open, I think you also open to who owns the house. Do you own a house because you're living in one, or do you own a house because you have a title deed? So there's still so many gray areas when it came also to those exemptions. So possibly that's why they don't want to go to that route, and to just make sure that all people contribute to the affordable housing levy. So I still think it's a very hot debate, but for the people that need to understand this letter, those are the instances. For you who is doing a business and you're paying the affordable housing levy for your salary. So if you're doing it for your salary as an employee, and I also mentioned that the director is also an employee of the company. So make sure that also as a director, because this is supposed to also make sure that the small businesses the business community is paying for the affordable housing levy. So make sure you either do it either way. If you're owning a business, you either do it as the affordable housing levy for your employees, with you as a director, as one of the employees, and pay it at that particular point. Or if you're saying I'm doing a business, but I don't have employees, so I'm not going to pay the affordable housing levy. If you're in that category, then you have to do the 1.5% on your gross sales per month. So either way, all businesses are required to pay for the affordable housing levy. I hope I'm able to be understood. So let me have your questions. So the finance, we were supposed to do this for 1 hour. And the finance bill 2024 is due to so many discussions here, so you can listen. This is a debate that you can listen from me, listen from other people, listen to the media. Just keep listening so that you can keep understanding, especially for you to understand how you're operating your business and how this is going to affect your business. So, okay. So let me see. I'm going to share the notes. So there's a link. I want to answer your questions. There's a link my co-host shared. There's a link my co-host shared that you can fill in. I'm going to share all these notes to you. So let me answer. Someone is asking. Let me see. There's something I have seen. So does the eco levy affect cement industry? I'm very sure that when it will be introduced, it is going to specify the manufacturing companies that are going to be affected. So is it all manufacturers? As long as you are a manufacturer, you have to pay the eco levy. So, or if you're going to do some, you can even be told you can do some specific things so that you don't pay for it. Possibly some to just show that you're eco-friendly manufacturer. So we're going to see more of that. So kindly go through withholding tax for supplies to entities again. So this is what I said. So for entities, if you're going to do supplies to, for now they have said public entities. So public entities could be mostly are parastatals and the county government, those public entities. At the moment, we do 2% VAT. So they withhold 2% VAT when they are paying you. Now they'll be doing 3% of withholding. This is on the corporation tax. The same way contractors do. If contractors do both 2% and 3%. So the 3% will be an advance for your corporation tax. So at the end of the year, when you be doing corporation tax, you'll be having an advance corporation tax that was paid on your behalf. So this is making sure. So sometimes we do the VAT and we remit the VAT very well. But when it comes to corporation tax, we say our business was a loss. So they are making sure that the 3%, even if your business is going to be a loss, but the 3% was paid for. So this is, and of course, sometimes I see when such is being introduced, it is introduced at the public entities, but now later, possibly next year, when we'll be doing if that will be will be imposed next year when we'll be doing the finance bill 2025. You see now other companies adopting, they'll be being told now to adopt that after you do the 2%, you now do the 3%. So so that these are proposals, of course. So someone is asking, will the hospital business also be required to be ETIMS compliant? They had objected previously. So ETIMS is on all businesses. And what I'm seeing right now for the hospitals, the insurance is telling you, for us to pay you this money, you have to give us an ETIMS invoice. So for the hospitals that we are doing representation, the insurance companies now cannot pay any hospital bills if you do not give them ETIMS invoices. So at the moment, even the hospitals are supposed to be ETIMS compliant. In case where landlord is on salary for different organizations, this is a good one. Does he still need to pay the 1.5 housing levy on his rental income when he's already paying the same on his salary? That's a good question. So if the landlord is employed, that is a different income altogether. The rental business is different business altogether. So at the moment, this is the explanation. The employer who you're paying for, who is remitting the money, the employer, because the employer is doing these deductions on your behalf. They do the deductions and they pay for housing levy and paying and everything. But for your rental business, that is a different business. You still do the 1.5%, the same way you're doing for the monthly rental income tax. I have a question. If you are offering bookkeeping services on a monthly fee is 30, am I required to pay any other taxes besides withholding income tax? Okay. So if you're offering bookkeeping services on a monthly basis, so Immaculate, are you doing bookkeeping for only this company. So if yes, if you don't have any, so for you, if you're doing the bookkeeping services for only that company, the company can do the 5% withholding because you're above 24,000. So they do the 5%. And then for you, at the end of the year, you describe your business income, you do the calculations, and you consider that 5% withholding that was done at that particular point. If you go to the threshold of the 5 million, you can do the VAT. Now we also have the turnover tax, but also turnover tax start at 1 million per year. So at the moment, if that is the only business or only income that you're getting, the company that is paying you can do the 5% withholding. Then at the end of the year, you do the business income. And remember to issue them an ITIMS invoice. Kindly issue them an ITIMS invoice. Are the integration costs for ITIMS recoverable? Yes, they are allowable deductions. They are allowable deductions, so you can use them to lower your profit. Okay, so once you declared all the income, you now less the expense. Okay, that was the explanation. In case where we buy airtime and data bundles from Safaricom, do such also require ITIMS receipt? So when you're buying from Safaricom, I believe Safaricom can still give you that receipt. So if you request Safaricom to give you a receipt, they will still give you that receipt. So make sure you have a receipt. Okay. So please advise, how can I help a client who is under VAT review? I can see some of them have been answered can be answered. So when it comes to the VAT, and this is something that I would caution you and I want you to really understand about the VAT special table, where you're going to file and you find the VAT, the system tells you VAT irregularities. So two things. First, did you have a payment plan that you have not honored? So if you have a payment plan that you don't honor, or if KRA keep calling you and you don't respond, they send you emails and you don't respond, what do? They are inactive. They inactivate your VAT obligation. So when you're filing, you find that you cannot be able to file. So you have to go to KRA and ask what is the reason behind this. So if it is a payment plan or is a payment that you're supposed to do and you have not done, they tell you pay so that we can activate it. So depending on your client, what is the issue? So I explain to you. Currently, the record is available. Is the recording available on YouTube? It's asking about the house. Just mentioned a few issues. An employer, if as an employer I pay levy for my staff, will I be required to housing levy on VAT return? Double taxation. This is what I've said. So if housing levy for your staff, you also pay for as a director of the company. So I'm imagining you also as the director of the company, you're doing housing levy for that. So if you're doing that, it is okay. But for businesses that don't have staff, so they are not doing housing levy, the director is not doing housing levy, they are supposed to do 1.5% of gross sales. So that is my own understanding. That is my understanding, and I think that is the right understanding. So, and they are doing 1.5% withholding, 1.5% affordable housing on top of 1.5% turnover tax. I mentioned that if you are an employee and you also have the rent of business, the employer, clarify employers in case rent of business that is remitting through the payroll, are they okay? Okay. So I don't know. Okay. So the rent of business also has employees or what? So the rent of business also have employees. Remember, we are doing the monthly rental income. The 7.5 is on gross rent. So it does not consider salaries, expenses, doesn't consider. So it does the 7.5%. Okay, someone is so you do the monthly rental income tax, the 7.5%, and you also 0.5%. So thank you for your questions. So on the presentation, because I can see so many faces, you can WK and Associates Facebook page and be able to and follow us, and you can be able to you can come in these webinars. A lot of tax webinars for understanding. Next week on Wednesday, we're going to do the tax trade digital businesses. So if you're doing a business or you're doing anything digital wise, can learn a lot. It's an area of interest, especially on Finance Bill 2024, and on because also our businesses were in the digital platform. It is very important for you. And then on Friday, talking about modern accounting, and of course, I always frame these trainings to be able to understand tax. When we are doing them, we can be able to understand tax. When you're also doing accounting, WK and us is an audit firm. We do tax and services. At the moment, if you already done your audit already, the period to December, which is supposed to be filed by you can talk to us. We have offers. You can talk to us, chat. Possibly my co-host, you a free calendar. The calendar book will do a free consultation. If you have a tax issue, if you have a bookkeeping issue, you can talk and we can help you. Do a lot of internal audit services. We also do services with tax services. Well, if you're having tax issues, we are very good to tax audits, representing for objection for the ADR, level, making get a fair assessment, and of course, being able to interpret the tax changes organization is also something that we are able to help you. We can also help tax planning, tax we might not be having. And with eTeams integration, I've really taught eTeams and how eTeams is operating. If you're not to even understand how to integrate your business, what need for your business to be on eTeams, understanding that tax compliance is something that we can help you and that you tax compliance. So with that, thank you so much. I don't want to keep you is at around 11:30 at the moment. Thank you for coming. See you on Wednesday. See you on Friday, and let's talking. You share the notes, so you can do. You can write them on the shared, and I'm going to share these notes. If you have a question, want to talk to me, you can pick our number on the there, and specifically say that you want to me and I can talk to you. We also want us to visit your organization, we can do that. So I say thank you so much for coming. I hope you've been able to think about finance. Let me just answer. Is that how much are creatives and content are supposed to pay? So, Sarah, for digital webinar, but if a company is supposed to pay for you, if you go to a company and they're paying you because content creator, they're supposed to be doing the 5% withholding. But come on Wednesday to learn more. So what are the next steps for the finance bill? So the drafting has been done. So have the public participation, the first reading, the committee stage, the second reading, the presentation in details, reading, the voting, consideration by the other house. We're going to have possibly amendments that are going to happen, and then assent president, and then of the publication, and it is going to now be turned S and R. So there's a process also, and the process happens very fast. So probably by June, because some of these are effective from 1st of June. So let's continue with the and God bless.